Hey, what's going on, guys? Bot Mentality here. And today I want to talk to you about shorting the VIX. It is a very high probability strategy. If you do this the right way, you will be successful nearly every time. And the reason why I say nearly is because there is no such thing as a 100% probability. But based off the historical statistics here, you have a really high chance of profit here. By the way, you're welcome ahead of time for taking advantage of this in the future, and I will jump into talking about this. So it's going to be a pretty short video. I'm not going to get too deep in any of the statistics. Let's look it up yourself. Pull up a chart, get a calculator, and start adding some things, subtract some things, and you might find an edge, okay? So here's the trade, all right? It's the VIX. I've talked about this a couple other times on my channel. If you go watch these videos, VIX profits, upcoming trade opportunity 10 months ago, how I trade the VIX, another video on it. These are just some of the trades I've done. I've got a trade open right now on the VIX, up 1,200 bucks on it. It expires next week, and I took that position back here. But what is the VIX? The VIX goes up when the fear is high and volatility is high. It is not an inverse of the SPY, even though it looks like whenever the SPY goes up, VIX goes down. That is as it appears, right? It is not an inverse. As fear picks up and volatility picks up, the VIX goes up. And that normally happens when the ES or the SPY goes down, okay? And here's what you need to note. Let me just zoom out a little bit more, get a broader picture perspective. Let me go to I'll go to the 20-year monthly, okay? And we'll look back since, we're not going to look, 2008. We'll look back since 2008, okay? If you look at the VIX, since 2008, we've only been over 54 on the VIX once, right? So you know, okay, if we ever get over 54 on the VIX, there's an opportunity there for a short side setup, a bear setup looking for downside action. Well, if you sat on the 54, it never happened until this year. You can also say, well, we haven't closed over 54 on the month more than 3 times on the VIX, right? And during this period. And so, okay, that's pretty interesting. Well, you know, then if you sold at 30 days or higher, based on the historical volatility, you've never closed or stayed above it for 3 months at a time. So chances are you're going to be correct on that play, right? Well, this is the idea on the VIX. 54 is a level that I just pulled out of my hat here. But if you look down, you'll see more often we'll hit this 47, 47, 47, 47 here. Over the years, we've hit between 40 and 50 multiple times. So, you know, that's okay. Well, you can make profit there, but it doesn't touch it much. And as soon as it gets up there, it goes right back down. So you might drop your standard a little bit down into like 35 in the 30s. Because when you zoom in, and let's just say for this year, let's look at this year. I'll do the daily. When you zoom in and take a look at this, you'll notice that if you look at this pink line that I drew over $30 on the daily chart, look at how many times we've closed in a row over that $30 mark. Not many times. And if you took it out a week and said, has there ever been 7 days in a row this year we've traded over 30 on the VIX? And the answer is no. Therefore, if you traded a 2-week till expiration option, or 3-week or 30 days, and you sold that premium, there is a high probability you're going to be successful, because every time there's a spike in volatility and there's a spike of fear in the market, the VIX drops. The reason why that is because there is a series of panic followed by a condensing of price action. So right here, let me give you an example. If you look back on the VIX, back here around that mid-September into early October area, on the ES here, you see we had this huge downside move here from 44.67 down into 4,300, right? Let me just zoom in a little bit more. We had this move, the sell-off from down here to down here. The VIX went from about 18 all the way up to 28. Look back over here. We've rolled and made new lows into October 1st. October 1st came here, and we made a lower high. That's because there wasn't as much fear, there wasn't as much anticipated volatility, even though the ES made a lower low. That's an edge you can exploit. You know that during periods of high fear, it's incredibly likely that the fear will subside, even if the market continues to sell. Because as soon as you get that bounce or you get that sideways price action, the fear will decrease. That's really what you're playing. You're shorting the fear, right, over time. The odds of a continual, eternal parabolic of fear are incredibly small, especially if you just zoom out. I mean, let's look at the worst economic crisis we have seen in our trading lifetime, right? 2008 was huge. Even during 2008 on the monthly, you had 3 months where you had price action trading over this, a little less than 3 months, over $50. That means anything you sold over that 90-day expiration, anywhere would have, assuming you sold 50s, would have expired out of the money. You would have pocketed all the premium. And that's not assuming if you sold out of the money. What if you sold the 60s, 70s, 80s, 90 calls, right? You have theta on your side. You have the implied volatility crush on your side. Those would have expired out of the money, which is exactly what you want when you're selling premium. Let's zoom out. Let's look at the next thing. We never even got anywhere close to here over the next couple of years. Look at this parabolic. This was the coronavirus parabolic, where you had a whole month where we reached prices as high as over $80. The next month, we were trading around $50. The month after that, we were sub 40. So that means when you saw this price action, if you were selling out of the money above the current price and you put time on them, so at least 30 days, you would have made money, especially if you laddered in and you didn't just bet it all as soon as we got to move up into 40, right? But you sold higher, you sold out of the money. Like the price could have been $40 here, and you sold the 50s and you gave them 60 days and you would have paid. You would have made money on those. Because 2 months later, we got sold all the way down sub 40. You see what I'm saying? So on a smaller time frame, zoom in here. Most recently, we had this move up on the VIX up into 35 when everyone thought the market was going to crash a couple weeks ago. And look what happened. We ripped up into 35, this almost to 36, and we haven't looked back. So up here into this 35 area, I sold some at 30. I sold call verticals when we hit 30. I sold the 31s. What was it, 3250s and 35s, and then when we hit 35, I sold the 3750s and 40s. These are call verticals, so I'm selling premium, and guess what happened? Both of those call verticals I sold, those spreads, expired worthless, because that is the high probability scenario. I made thousands of dollars doing this, and I will continue to do this in the future every time we see a significant run up on the VIX, because as history has proven, no matter what happens, whether it's the worst economic crash of our lifetime or the second worst economic crash of our lifetime, selling time, selling that theta, selling out of the money or at the money, with time on your hands on the VIX, there's a high probability chance they're going to expire worthless, okay? Because you're selling fear, and the fear does not stay at peak for long, even during the periods where you'd think we'd have the most fear. VIX got killed, VIX got killed. It's what's going to happen. It's what's going to continue to happen. On shorter time frames, let me go to the 180-day. Just to show you each one of these parabolics up into this 24, 26 area, they each got sold off right away. So whenever VIX hits 25, if you sell the 2750s, 28s, chances are over a month or over, let's say 3 weeks, 2 weeks, they're going to expire out of the money. And yeah, that's all I got for you guys. So I hope the next time VIX rips, you can sell some premium and collect some money. And if you do, come back and let me know you made some money on it. All right, I'm getting out of here, guys. Continue to stay focused on developing that bot mentality, which is the trading mentality, where you learn to eliminate your emotions so you can trade like a machine, guys. And if you're interested in joining our chat room and learning more about how to trade like this, there is information in the description box below. I am out of here. Deuces.